In this video, I'm going to show you step by step how I took $20,000 to $400,000 in my first year in dicey and forex trading. What's going on, fellow entrepreneurs? My name is Jay. For those of you that have been watching my channel, the Millionaire Mindset YouTube channel, for quite some time, you will know my channel is all about entrepreneurship, ways to make money online, in affiliate marketing, drop servicing, and my personal journeys on how I make money online. Today's video is going to be something very different to my usual type of content, which is drop servicing, affiliate marketing, creating YouTube channels, YouTube short pages, and building different income streams over there. In today's video, I'm going to show you a 3-step strategy I've been using on the forex and indice market for the last 1 year that has turned me $20,000 to $400,000 in my first year. Now, I'm not saying you need $20,000 to do this, but what I am saying is I've seen over 2,000% return on my investment in my first year using this strategy on the forex and indice markets. And I'm not here to sell you some ridiculous $2,000 course. I don't even offer signals for my trading yet. It is something I've considered for the future, but in my YouTube channel, we're just going to be talking about education based on the strategy completely for free. I do this full-time off of YouTube. I don't need to sell a course on this information because it simply works for me 100%. And for the last couple of months, I've been uploading trading videos at least once a week, and I've been building a playlist for you guys on YouTube called Trading 2020, where you'll see some of my videos there where I actually trade live. One of the videos I generated over $1,000 just in that video alone, and I actually document that process live and analyzing the charts while placing trades. So in today's video, I'm going to go over the 3-step process that I use to analyze my markets. It's going to be a very different strategy to what you've heard before. Most people when trading use support and resistance, trend lines, major key levels, perhaps the MA moving average crossover strategy, maybe the algo paid plugin that tells you when to buy and sell, which is also a very delayed and laggy indicator. In today's video, I'm going to show you how I trade just on the naked chart. I don't have a single indicator. I don't have any trend lines. I don't have any support and resistance. I don't have any bullish or bearish flags or double bottoms or triple tops or double tops. I don't use any formations. I don't use any indicators, and I don't use any trend line whatsoever. So the 3 things that I want to go over in today's video is analyzing the markets in the eyes of institutional footprints. Meaning every market that you trade that has buyers and sellers in the market follows institutional process and institutional ideas. You will notice if you've ever traded retail in your life, or if you haven't traded at all, I'm going to give you an idea. I mean, take a look at something like this. Most traders, if I come over to, let's say, 15-minute charts over here, most traders would probably draw some kind of trend line from point to point. And this is actually a really good example. Most traders, when they see a break of their trend line, they wait for a retest and to go and buy. So a lot of traders over here would have been going to go and place buys like this, stop loss just below the low. And you will notice a lot of the times you get kicked out on these kind of concepts that you've been taught, simply because behind this moves, banks and institutions that are investing and buying and selling billions of dollars into any of these markets, this is NASDAQ by the way, on the 15-minute time frame, want you to buy on these retests. They want you to buy on the breakout of trend lines and resistance and support. Most retail traders then would have gone and placed some kind of buy over here, even maybe over here where a green wick kind of forms, a bullish candle, and their stop loss gets hit immediately. Now, there's a reason behind every one of these moves. So the first thing I want to go and talk about in my strategy is market structure over here. So when it comes to market structure, we basically just want to identify. If I just clear my chart, we want to go and use multiple time frames. I usually go and start on the daily and go and identify highs and lows. If I go and take out my path tool over here, you can identify, here's a high, here's a low, here's a higher high, here's a higher high, a lower low, a higher low, a lower high, a lower low, a lower high, a lower low, a lower high, and a lower low. So here you can see for the last, since October or November 2021, NASDAQ has been bullish all the way. Only as of December 2021 and January 2022, NASDAQ has become extremely bullish. Although structure is bearish at the moment, if you go and refine to a 4-hour chart, usually what I do with my time frame is I use the 30 rule. I want to give you an important rule that I recommend you write down when it comes to trading different time frames. I use what you call the 30 rule. So for example, 1 day is 24 hours. So I will take 24 hours, divide this by 30, that gives us 0.8 hours. So that means if you are analyzing on the daily chart, you want to go and refine on the 0.8 hour chart, which is about 45-minute chart. So over here you can see from the daily to the 45-minute, and we can go and take a look at structure within the daily time frame. A market will never move in forward ups and downs like this. It will never look like this. As on a refined time frame, you're going to get movement that looks like this: highs and lows, lower highs, and then you get a shift in structure. Higher highs, and then a break of structure over here, and then lower lows and higher lows. Again, break of structure over here. You've got higher highs forming and higher lows forming, and within this, you've got more structure. You've got, for example, lower lows and higher highs over here. Again, break of structure, higher highs and higher lows, and so forth and so forth. So therefore, when analyzing structure on various different time frames, it can get extremely confusing for a new trader. So if I just go and delete all of this, as you can see, we're now on the 45-minute chart, and you can see over here, this is what structure looks like on the daily, refined to a 45 minutes. We've got over here, higher high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, higher high, higher low, higher high, higher low, higher high, lower low, lower high, lower low, and a higher high, higher low, higher high, higher low, lower high, lower low, higher high, lower high, higher low, higher high, lower high. And you can see we're back to bullish and back to bearish by break of structure. So that's why you can see within a refined time frame, moves like this, although we've gone bullish over here, in an overall schematic and time frame on the daily chart, we still remain bearish. And this can play with a lot of traders' minds and emotions. Also keep in mind that you can't just trade structure. It's important to pair this up with a few strategies that I'm going to show you later in this video. I will leave timestamps down below if you want to have a look at the different categories and sections. And you'll take a look. If I use the 45-minute time frame, if I take 45 minutes, turn this into seconds, that's 2,700 seconds, divide by 30. That is the 90-second time frame, which is the 1 or the 2-minute chart to go and refine. So again, if I come over to the 2-minute chart, you can take a look over here. We've got lower lows and lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, higher high, higher low, lower high, lower low, and back to higher highs and lower highs, going bullish. So again, understanding that over here we are bullish, but remember, in an overall structure schematic on the 45 minutes, we are still bearish, and also on the daily, we are overall bearish. So it's super important to understand your structure on multiple time frames. I usually operate between the daily and the 45 minutes. So again, it's super important to understand that we can't just go and trade market structure. But I want to show you the second and third point that I pair up with structure, which really makes a fantastic strategy. So secondly, I want to go over supply and demand zones and refinements of supply and demand zones. Also, keeping in mind market structure in the back of your head. And then thirdly, I'm going to go over entry criteria in my points of interest, which would be my supply and demand zones, with an accumulation and distribution method called Wyckoff, and an alternative called double MENTFX block entries. So I'm going to come over back to NASDAQ, since we're using NASDAQ as our example in today's video. I'm going to come all the way, just going to go reset chart to where we are over here. I will go and start off on the daily and go and identify any demand zones, which we could look for potential buys, or supply zones, which we can use for potential sells. So over here, you can see NASDAQ is extremely bullish at the moment. And you'll see over here where price has now started to reject it upwards, where price has now started to move upwards over here. This move from this low to this high was over about 800 pips. And the reason behind that is because we tapped into a demand zone yesterday. So I was looking at buys in these areas on a smaller and refined time frame, which I'm going to explain to you. But the first thing I'll go and do is go and identify a demand zone. So a demand zone is a last downward candle before an up move that has been unmitigated. So for example, take a look. Keep in mind, this is the daily chart. So for example, take a look at this candle over here. This last down move before an up move would then be considered a demand zone. So I use a GAN box to highlight my demand zones with a line in the middle to identify 50% of the demand zone. And you'll see over here, price exits this demand zone, comes back to fill it and retest it, and continues moving higher. Over here, another demand zone. Last down candle before an up move, and you will see the market never retested it over here. But over here, we had a retest on this demand zone, and I'm going to explain to you entry criteria and refinement within this later for the continuation move up. It's the same with supply zones. So if you take a look here, a supply zone is the last up move before a down move that has been unmitigated. I like to keep my demand zones red and my supply zones green. You can take a look over here. We had a wick into our supply zone for a fantastic sell, which was close to 1,500 pips over here. So that's just a quick nutshell on how supply and demand zones work. A demand zone is a location in the market where a lot of buyers from banks and big financial institutions have bought millions or billions into this market, and it will always want to go and retest these demand zones to fulfill these big buys in the market. Same with supply zones. Supply zones are areas in the market where a lot of sellers are sitting in the market, especially when it comes to banks and big financial institutions selling off millions of dollars in this market. It will want to come back and retest and fulfill these supply zones. When trading, retail traders make up 5% of the market. 95% is based on institutional structure, big banks buying billions and millions into these kind of markets, how they influence the markets, how they move the markets, and how we can go and trade along those footprints of those big institutions buying and selling in the markets. So you will see a reason for all of these big up moves over here is because we're tapping into demand zones. So you'll take a look over here, this big move over here counted for this demand zone here. So although this is a green candle, this move down on a smaller time frame still makes up a whole lot of black candles, which counts as a demand zone. So you'll see over here, if I highlight it across all the way and just make this my demand zone, we wicked into it and we had a big move up. And you'll see over here, if I refine maybe to a 4-hour time frame and I just go and follow this demand zone, you will see this demand zone was this last black candle over here, the last down move before the up move, which hasn't been mitigated. The market never came back to retest this demand zone until about a year later in March 2022 over here, where we had awesome potentials for a buy. So same thing what's happening over here at the moment. We want to come back to the daily and go and identify lower demand zones, which we could look for buys, or higher supply zones over here, which we can look for sells along the way. So if I go and take a look at this side of the market, we've got a demand zone over here. I'm just going to highlight this. If I go right click settings and just make this 2000, it will stretch across the whole market, which makes it pretty easy. So you can see over here, we tapped into this demand zone yesterday for a good potential for a buy over here. And the market still wants to go lower because we tapped into the demand zone. Financial institutions were buying over here into the supply zone over here, which we can start looking for more sells. Now, if I move again back over here, let's take a look for our next demand zone. Our next demand zone would be this unmitigated demand zone over here. On a smaller time frame, these wicks that have been unmitigated count as demand zones because they are candles, black candles, last down moves before the up move on a smaller time frame. So once we've identified and highlighted demand zones over here, we can go and refine. Remember, our daily chart was our 45-minute chart. And over here, keeping in mind that structure is bearish, let me give you an example of how we can use supply zones to go and catch sells on this market. So what we'll do is we will take the last down move. For example, let's use this one over here. This is the last up move before a big down move that broke structure. You'll see the market never traded back into it, came back to test the supply zone to continue moving lower, which leaves us over here an unmitigated demand zone if I make this a demand zone, which again came out, never retested it. Over here it retested, which made a good opportunity for a buy. But remember, understanding structure in this market, knowing that it's bearish, we wouldn't expect this demand zone to hold very long. That's why it broke straight through over here, forming more supply zones over here. So at this point of interest over here, we can start looking for sells. So let me replay the market and give you a couple of ideas. So I'm going to click on the replay tool and just click back on any random point. Keeping in mind the demand zones that we have highlighted like you would do. So my trading plan works as follows. So the first thing you would do is, again, if I recap, identify market structure, S&D zones and refinement. And thirdly, we're going to go over entry criteria using Wyckoff and double MB entries on our S&D supply zones. When trading, the best way to not feel FOMO'd or get FOMO'd out of a trade, or to stop yourself from forcing in trades, which often can lead to terrible losses or just bad emotional trading decisions, is I will only trade a market if that market is in my point of interest. My point of interest being a supply or demand zone. Other than that, I won't trade the market unless it's not in any of my points of interest. So over here on the 45-minute time frame, we can go and highlight potential supply zones. So over here, we have a supply zone. You will see this is a supply zone because although this is a black candle, this counts as the last up move before a down move that hasn't been mitigated yet. You'll see the market has never come back to retest this. We have another supply zone over here, which we can look for sells. But you will find when you go throughout the market, here's another supply zone here. There's another, okay, that doesn't count. You'll see this has been mitigated because here, this black candle traded out of the supply zone, came back to retest it. So this supply zone would not count. It's mitigated. You'll see here, this supply zone doesn't count. It traded out of it, never came back to wick it. This supply zone over here doesn't count. It traded out of it, wicked it over here, which was a good opportunity for a sell, continued lower. Same thing over here. This is a supply zone that hasn't been mitigated. You only want to go and identify unmitigated supply and demand zones. Over here, we can see a demand zone. So maybe for potential buys. Over here, if I go template, demand zone. And before I go and explain to you how I enter based on Wyckoff and double MBs, I want to explain to you what that is, how you can identify it and use it yourself to confirm your entries when trading. So let's go and have a look. I know this one website is really good. It's called stockcharts.com. It'll be the second link over here, school.stockcharts.com, which will give you a good idea on what Wyckoff is. Now, Wyckoff happens everywhere in the markets on any time frame. It is fractal and can get confusing if you don't know where to look for Wyckoff, and can get confusing for somebody that has never seen this before. But again, you can't just trade Wyckoff. You can't just trade S&D zones. You can't just trade structure. You need to pair all three up to line up for the perfect strategy or the perfect trade. So over here, if we take a look at Wyckoff, if we take a look at the accumulation Wyckoff, which usually is the indicator or the confirmation that the market is going from bearish to bullish. So over here, we've got bearish and we've got all these different points that we can point out on Wyckoff. So when a market comes back down to a supply or demand zone, I will confirm my entry with Wyckoff, as once this forms, it is your confirmation that this demand zone is going to hold and turn the market the other way for your buy or your sell. So over here, we will have the first point, which is your preliminary support, where substantial buying begins to provide pronounced support after a prolonged down move. That is your big down move here. Volume increases and price spreads widen, signaling that the down move may be approaching its end. So you've got a preliminary support. You've then got your selling climax. I'm going to go over the live market now, identifying this for you. The point at which widening spread and selling pressure usually climaxes as and heavy or panicky selling by the public is being absorbed by larger professional interests, that being your big financial institutions, at or near at a bottom. So that bottom being your demand or supply zone. Often price will close well off the low in a SC, your selling climax, reflecting the buying by these large interests. You've got your AR, your automatic rally, which occurs because intense selling pressure has greatly diminished. There's more buying power entering the market, A wave of buying easily pushes prices up, like I just said. This is further fueled by short-term covering. The high of this rally will help define the upper boundary of an accumulation. You've then got a secondary test, which will go down and test the area or unmitigated demand zones in your SC, which is your selling climax. You've then got a test on the AR, which is large operators always test the market for supply through a TR, STs and springs. I'm going to go over that now. And at key points during a price advance, if considerably supply emerges on a test, the price is often not ready to be marked up. A spring is followed by one or more tests. Over here, you've got a test on the AR. You've then got your S&T phase B, which usually goes below the selling climax. So your S&T phase B counts as your test over here. Your S&T phase B kicks out the buyers on your SC, creating liquidity. Your sign of strength going above the AR kicks out sellers, because remember, every point in the market, there's some kind of liquidity. If I come back to the market here, over here at this high, there's liquidity. There's people placing stop losses or sell orders or buy stops. So the banks will want to go and collect that to collect all of those losses and that liquidity. There's liquidity over here. People placing buys or buy stops or buy orders or stop losses on their buys. So banks will want to go and collect that liquidity. And that's exactly how Wyckoff forms. You will never get a move that just goes down into a demand zone and straight up. You're going to have some kind of Wyckoff play out. For example, I see it perfectly over here. Selling climax, AR, ST, S&T in phase B that goes below and collects all of this liquidity. You've then got your sign of strength, which cleared all of these highs and has never come back to retest it. So this Wyckoff formation over here is good confirmations for a buy on your test over here. So after your selling climax and ST, you're going to have an SNT in phase B, which will both clear the lows of the ST and the SC, collecting liquidity. You will then have some kind of move clearing out the AR, and then you'll have the test or the spring on that SNT in phase B. I usually confirm my buys or sells on the test of the spring, which I'm going to go over just in a bit. So again, you've got another type of Wyckoff for distribution schematic. So for example, if we're in a bullish market, we have Wyckoff play out on a supply zone, we can now expect to go bearish for confirmation for sells. So over here, we've got a preliminary supply. We've got a buying climax instead of a selling climax. It's basically the exact same as this, just flip the other way around. You've then got your ST, you've then got your AR, your ST, sign of weakness, which clears the AR, your UT, which usually moves higher than your ST, and then you've got a test on that UTAD. And I usually use the UTAD test as my confirmation for entry, especially the test on the UTAD. You then get last point of supply, and which continues into a more bullish phase. So if I go and have a look at NAS over here, and I go and zoom in on any of these charts or anywhere on this chart, Wyckoff appears everywhere. You've got Wyckoff over here. You've got Wyckoff over here. You've got Wyckoff over here. Wyckoff over here. You've got Wyckoff within this schematic. You've got Wyckoff over here. You've got more Wyckoff over here. Wyckoff over here. It is everywhere on any time frame. If I go from the 2 minute to the 4 hour chart, over here, if I zoom out, you've got Wyckoff over here. You've got Wyckoff over here, Wyckoff over here, Wyckoff over here, over here, over here, over here, over here. It happens everywhere and anywhere on any time frame. It is fractal on any market. And Wyckoff will occur on any market where there's some type of buying or selling power. That is crypto markets, forex markets, indices, commodities, metals, you name it. This schematic happens on every time frame on any market. So if I go and have a look, for example, we hit a demand zone over here. You can see this was a demand zone, good opportunities for a buy. If I go and refine to my 30-minute rule, which would be the daily, the 45-minute, and then the 2 minutes. So now we're on the 2 minute. And over here is a perfect Wyckoff schematic. So let's go and bring this back over here, as we got our point of interest over here, which is our demand zone. So if I had to go and label Wyckoff on this, over here, we've got our preliminary support. If I highlight that there, we then have our SC, our selling climax. So if I go and highlight this, SC, we then have an AR, over here. So this would be our AR. We then have an SNT in phase B, which clears the low of the SC, creating liquidity. So SNT, phase B. Let's continue to play this market and identify. So over here, this would be our spring over here. So this can be our spring, which clears the low of the SNT in phase B and SC, again collecting more liquidity. Once our spring has been formed, we want to look for any kind of break of structure of these highs over here. Here you can see we had a break of structure. Let's click the next candle. We want to wait for any kind of retest on this new demand zone that is formed here. So now we can go and place our buy here with our stop loss below the low and our TP at the next unmitigated supply zone. So let's go and have a look if we tap into entry. So over here we've got our BOS. Let's just click on next candle. Okay, so we've now tapped into our trade. Let's go and have a look at what happens. All right, so what I would go and do is, we can see we're now about halfway to TP. During this trade, to go and manage my trade and have a better risk management plan in place, I would go and use, like I explained over here, what you call double MB. I would go and use the double MB to really go and improve on my risk on this trade and also manage my trade much better. Using this strategy, I've been able to turn losing trades into profitable trades. So how this would work is, as soon as you have a double MB form in your trade, a double MB from a low to a high, we've got over here this low to this high, that's a double MB. We break this MB, forming a new one over here from this low to this high. And as soon as we break the second MB, I will go and set my stop loss to break even, close partials, and let our trade run. So that way, I've made profits on the trade already. It's a risk-free trade. So even if it does come below straight into stop loss, you've made profits and you just break even on the other trade. So this is a great strategy I use to go and turn trades that would have been losses into profitable trades, really increasing my win rate with this strategy and really trading risk-free. So over here, if I go and play, let's go and have a look if we hit TP. All right, okay, perfect. There you can see we hit TP at the supply zone. And again, at the supply zone, if I go and refine, let me just delete everything that I've had here. We can go and look for sells. So what I'm going to do is on the 2-minute time frame, I'm going to come over to, I'm going to go and make my points entry. So we've got over here, remember if we look at our Wyckoff, we want to look for our preliminary supply. So over here, if you look carefully, this black candle here would be our last preliminary supply. We then have our buying climax over here. So we're going to add the texture, buying climax. We've then got our AR. So let's go and see if our AR forms. This would be our AR. So over here, we've got our AR. We then want to wait for an ST to form, another little move up. So this small little move over here would be our ST. Over here, this bigger move down over here would be our sign of weakness, clearing all of these lows and collecting liquidity. We've then got our UT, which is even a bigger move up, which over here would be our UT. And now all we want to look for is a test on this UT for the confirmation for the entry. So here you can see we've got our UT, back down to test the sign of weakness, and then back up for the UT test. So let's go and have a look if we get that as an entry. Okay, in this case, we would move that up to our UT as that becomes the new high, as we want our UT to break the BC. We then want to highlight our entire UT supply zone, which is this last up move before the down move, and you'll see it hasn't been mitigated because it's never traded out of it to retest. So all we want to do is we want to wait for it to trade out of our supply zone on the UT and wait for the retest for our entry. So if I go and speed this up, okay, so there's our break. What I would go and do is I'll go place my sell position next to this candle over here, or a stop limit, sell stop, stop loss above the high, and our TP at our next unmitigated demand zone. So in that case, it would be this move over here. Let's just make this our demand zone. We take TP all the way down to unmitigated demand zone. And let's have a look if we get tapped into our entry. Okay, so we've tapped in just on the exit of our supply zone on the UT. And let's go and have a look at where we get to. So again, over here, as soon as we're about halfway through the trade, I'll set break even. Let's unlock that. Break even plus set plus close partials, meaning it's a profitable trade. If it comes back to break even, you've made your profits on your partial and the rest is just break even. There's risk free and no loss. So let's go and take a look if we hit TP. Okay, and there you go. You can see we went straight through TP all the way down over here, deeper into this daily demand zone. So again, now that we're at the 50% of this daily demand zone, let's go over this one more time. We can start looking for Wyckoff confirmation for a buy to the next unmitigated supply zone. Just going to remove these drawings. So again, let's go and identify Wyckoff India to get a buy position all the way to the next unmitigated supply zone. But again, we confirm our entry with Wyckoff. So over here, we would have our last point of supply. We'd have over here our selling Climax. We'd have our AR over here. Remember, this on a smaller time frame, like the 5 or 15 second, would look like this. We then want to look for our ST. So let's go and play this market and see if that forms our ST. Okay, so this would be our ST. We then have our sign of strength over here, clearing out the AR. So that's our sign of strength. You can see this move was higher than the AR. We then want to look for a move, clearing all of these lows. Not yet, not yet. Okay, let's just put a line here to show you. That would be our break of structure forming the UTAD. So let's just put BOS. And there you go. This would now become your SNT in phase B, clearing all of these lows. We then want to look for some kind of move up, clearing these highs. There we go. On our test over here, clearing these highs over here, just like that. We then want to highlight an unmitigated demand zone over here, which we can then look to take buys from this daily demand zone to the next unmitigated supply zone over here. So let's just go and make this a supply zone. Let's take our TP up to this top. We want to put our entry point on that demand zone, stop loss below the low, and our TP at the next unmitigated supply zone. So let's go and forward this to see how we do. Okay, so we've now entered, still at break even. All right, big move up. So halfway over here, I would have set break even so that there's no risk, taken partials so that it's a profitable trade. And there we go. We tap into TP. And I do want to let you know, I've not seen this market before. It's just an example. I'm playing on a replay tool that I've taken back way back to a random point that I didn't prepare for this video or anything like that. I'm just showing you how the strategy works with the power of supply and demand zones, understanding structure. Although we're in a bearish market, we can still take buys or sells. So again, it's super important to keep in mind that you need to pair up all three of these strategies over here. Identify your market structure, know where the market's going on multiple time frames, identify your supply and demand zones that have been unmitigated. It's important that they've been unmitigated. If they've already been mitigated, there's going to be no power held in those supply or demand zones. And then your Wyckoff and double MB entries. So like I explained to you over here, again, if I show you how refining with Wyckoff helps so much. Here we went to TP. Take a look at how good your risk to reward ratio becomes. Over here, we just ran a 1 to 10.46 buy position over here. These sells over here were also 1 to 8 RR, 1 to 9 RR. Unlike where you learn a 1 to 1 or a 1 to 2 RR, here, one profitable trade is the same as 10 losses. So you can have 9 losses in a day, 2 wins, and still be $1,000 in profit for the day. And that's where risk to reward ratio and risk management, knowing when to set your BE and take partials, can turn you from a losing trader and losing trades into consistent profits and never having your trades hit stop loss. And doing this and applying this to the markets for the last year, I've been able to take $20,000 to $400,000. Not because I'm an amazing trader or because I'm some kind of guru, just because I've applied myself to one simple strategy that works, risk management, which is so important when it comes to trading. I've been able to get consistent profits with trading. So what I'm going to do is to help you out even more with trading. I'm going to load up my trading playlist over here, which will show you a whole bunch of live trades that I've taken throughout the videos and actually making profits live for you. If you want to go and have a look at some of my old strategies that I used to do, maybe the win to lose ratio on that, you can have a look at how I made profits on those strategies. A lot of these videos I actually teach you the strategy and then go and trade live according to that. So in future videos, I'll definitely go over this again and actually go and place live trades on the market, how I would place them, where I would set my stop loss, when I would take break even and take partials, and all of that I would do live for you. So make sure to subscribe to this YouTube channel and follow my trading playlist over here. Save it to your watch later, go and click on it, learn more about trading, and I'll see you in tomorrow's video.